Good afternoon to our CLA family members, clients, community partners, and friends. Welcome back to our live stream. We sincerely hope that all of you are staying safe and healthy at this time. The joy of this extended tax season, going all the way to May 17th, is nearing completion, and there is so much that is going on with both the IRS and economic relief. So first, we have one of our newest members of our National Tax Group, Camille Evans, joining us, and she is going to talk about what the heck is going on with the IRS. I mean, notices, refund delays, she tells all. So welcome, Camille.
Thank you.
We also have updates on two hot areas of economic relief today. So we have Larry Adams, and he is going to provide updates that we are seeing related to Shuttered Venue Operator Grant Program. Welcome back, Larry. And we have Karen Blasek joining us, and she has breaking news on the Restaurant Revitalization Program. So it's great to have you back with us, Karen.
Thanks, Leslie. It's great to be here.
Now, before we dive in today, we do have some housekeeping that we want to cover. We have the ability for live Q&A during our session today. In order for you to participate, you must register and log in using the link below me. Those questions will appear for the audience to see, and you're going to have the ability to like those and move those up in order of priority so that we can address them. We have moderators that are standing by ready to engage and interact with you. We also do want to let you know of a special event that we have coming up on May 19th. We have a mid-year market and legislation update. You can register for that event on our website. Now, in addition to webinars, be on the lookout for articles and other white papers providing additional guidance. And as always, contact your CLA professional because we absolutely want to talk to you. So let's start with Camille. Camille, you did a fantastic session internally about a week ago for our team, and you talked about just how delayed things have been at the IRS. So we thought it would be great to take that insight externally because we've got clients getting all kinds of odd notices about returns being lost. I've had clients have things that have said, your return's lost, or, did you file a return? And then we've got people asking questions because maybe they filed a claim for a quick refund and those refunds have been anything but quick. So let's talk about refunds, just starting in general with what our normal refund statistics look like.
So normally it depends on whether you file electronically or by mail. So 9 out of 10 refunds that are filed electronically, returns that are filed electronically, the refunds are issued within 21 days. If you file by mail, it normally takes about 6 weeks. So it's a different process depending on whether you file by mail or electronically. Mm-hmm. This year, things are a little slower just because of the IRS and COVID issues and social distancing. So everything is a little far behind, but still 9 out of 10 are still getting issued within 21 days if you file electronically. So what you can do, though, generally to find out the status of your refund within 21 days of filing electronically and 4 weeks of filing by mail is go to Where's My Refund. Within 24 hours of filing electronically, you can go to Where's My Refund, which is IRS. You can check that on IRS To Go app too, with the number 2, or at irs.gov. And it's updated daily, and it will show you that you've either, it's been filed, that it's being reviewed, or that the refund is issued. And you can do that after 4 weeks with a mailed return. So there's a difference in timing. So that's the general process.
That's really helpful. Now, are there other types of refunds that take longer to process?
So yes, so if your refund has, if your tax return has issues, if there are errors in the return, if it needs further review, if you are applying for the child credit or the earned income tax credit, or if there's some foreign source issues involved, or other things, it will take a lot longer. Also, if the IRS has additional questions, it will take a lot longer. So different things take longer periods of time in general, yes. And it's quite far behind again on certain issues.
Yeah, and so, when you speak about things being quite far behind, I know some of the things that we're seeing that are quite far behind are delays on carryback claims that were filed last year, as well as, 941s for retention credits. Can you comment on any of that and just what we're seeing trend-wise?
Sure. So for the 941s, those are filed by mail. And so they are quite far behind again, because they are filed by mail and you can't file electronically. So it will take probably 9 to 12 months to get your refund in those cases. And anything that's been filed by mail, amended returns generally will take at least 16 weeks before they start processing things. That's just starting the process. So again, it depends on things, but it is quite far behind.
Yeah. So what are some ways taxpayers can check their refund status if they haven't received it and they're just curious about the status?
So in a certain time period, which I talked about for electronic filings, it's the best way to do that is to go on IRS to go. Where's my refund? That's the best way. You can't call in and get more updated information. No one else has more updated information. The same thing if you file electronically for your 1040s. Go on and say, where's my refund at IRS to go or IRS.gov. After that period, after the 21 days or 4 weeks, you can call the IRS, or you can go into a local office and talk with someone. You can also use a representative to help you get more information. But in that window period of 21 days or 4 weeks for mailed returns, you won't get more updated information other than going to where's my refund.
These are just really great tips. So we are definitely going to keep you around for questions as they're coming in. We already saw some coming in before the session even started. So now let's pivot to Larry Adams and talk about Shuttered Venue Operators Grants. Larry, it's great to have you back, and it's been a little while since we've had you, so I think it's helpful maybe that we just start with a refresher for those that need it about some of the key points of the Shuttered Venue Operator Grant.
Sure, it's great to be back, Leslie. The Shuttered Venue Grant is a lot different than everything else out there. It's not a PPP loan. It's not an employee retention credit. It's a grant program based on submitting an application, getting approval from the SBA, and getting your share of the funds. And it's all dependent on eligibility, but there is a lengthy application process.
Yeah, so talk a little bit again about who is eligible for this grant program.
So these are arts organizations. So live venue operators, movie theaters, museums, even talent representatives are eligible because they're tangentially related to the industry. But the big thing is you had to be in business and February 29th, 2020. And if you are not in business because you closed down because of the pandemic, you intend to reopen. But the key is 25% in gross earned revenue comparing 2019 to 2020.
And then the grants are pretty substantial. Talk about how big these grants can potentially be.
They can be big, and you really need to evaluate it because the way that they calculate them initially is 45% of 2019 gross earned revenue with a $10 million cap. So $10 million is a lot. I don't know if it's a lot for a Broadway theater, but it's a lot for my clients. But if you think about organizations like a museum that are maybe funded through contributions or investment income, it might not be such a big grant. The employer retention credit or the PPP loan may have been a better way to go.
Yeah, so that's really helpful. And I think it's helpful to compare all the programs. And speaking of which, we talk oftentimes about what PPP can be used for. I think it's helpful here to talk about what those funds can be used for because it's expansive.
It is. It is. It's a very broad use of funds. I mean, you start with payroll. You look at independent contractors. Rent, utilities, mortgage payments, debt, anything. And they have a category called ordinary and necessary business expenses. So you can imagine that includes a lot of information as well, or a lot of types of expenses as well as administrative costs. The only thing that I need to warn everyone is that it's, again, no double dipping kind of thing. You can't use it for the PPP or the employee retention credit and also go back and use it for the shuttered venue.
Yeah, and I think when we're comparing and contrasting programs, it's also helpful to understand that it works a little bit differently in so much that there's a more formal application process too. So walk through what that looks like.
You're exactly right. In fact, where I go and where everyone goes is to the SBA.gov website. There's a lot of good information, PDFs, including FAQs. And at this point, with no real regulatory guidance, the FAQs are the Bible when it comes to applying for this grant. But I mean, there's a 60-page application guide. So if you are going to go ahead and commit to this process, I would recommend you look at the application guide and follow it very closely because there's a lot of good information out there. But there is, like you said, it's a grant. It's like any government grant if you've ever applied for one. So a lot of other information that you have to submit: tax returns, financial statements, drug-free certifications, suspension and debarment certifications, and on and on and on. It's a big process.
Yeah, I think that's good to know. And then just, what else do organizations need to know if they want to go get that SVOG?
I think the first thing they need to understand is that they're going to risk rate these applications and provide payments based on how risky they think your application is. If you do not submit a 2020 tax return with your initial application because, well, we're only in May of 2021, so a lot of nonprofits at least don't have their 2020 tax returns done, then they're going to split up the payments. But if you're a low risk application, you're going to get a lump sum. But the other thing that people have to remember is that they can spend money on this grant back to March of 2020. So if they incurred costs in 2020 and they get this grant, they can immediately submit those receipts and get have the grant taken care of. So the costs go from March of 2020 to December of 2021. The last two things I want to point out related to the grant is if you're over $750,000, like every other federal grant, you're going to be required to have an audit, a single audit. And again, nonprofit organizations are probably a little more used to that. Than the for-profits would still have to have an audit. And another thing for the for-profits is these grants are not included in taxable income. So good thing there.
That's a big deal. That's a great
Yes.
deal. Well, it's interesting. We've been dealing with this program really live probably since about the end of April. Here we sit about mid-May. So tell me a little bit about just some of the recent updates that we've gotten on the program.
Well, one of the things that the SBA just did is they that FAQ, I think, is going to be SBA's second name after a while because they just released another FAQ related to this grant dated May 11th, and they talked about some of the things how they're going to make decisions. So if you submitted an application, they're expecting to make a decision in late May. And then they're going to put you in a priority period. So the priority period will be late May for the people who had the biggest decline in revenue, early June for those people with lesser of a decline, and then all the rest of the people are going to fall into a late June bucket. So don't expect the funds tomorrow, but they do commit to making their decisions by the end of May and start dishing out the funds, I suppose, sometime in June.
Yeah, that is just really interesting how they're choosing to legislate these things almost vis-a-vis FAQs or put out more information that way. So any final thoughts on that program as we wrap up your section?
I would just say, the latest statistics from the SBA are that 11,600 applications have been received, and that represents about $11 billion of money. So this is out of 16 billion. So if you look at the numbers, there's also 12,000 applications that have been started in the system that haven't been submitted. So overall, 23,000 total applications, and they've only used, and I say only, $11 billion. But it seems like there's still going to be money out there. The SBA is suggesting that people apply by late May, but if there's leftover money, there's a supplemental grant that's called for, which is equal to half of your original grant. So if there's leftover money at the end of the initial process, there's the possibility of getting the supplemental grant too. But I've had lots of conversations with lots of different people. And I think the thing is make it easy for them to review your grant application. Put in reconciliations, upload all the information. If you have to upload a video of a performance for them to see what you're talking about, then upload the video of the performance. I mean, you want to make it easy for those people to decide in a positive way for you.
Yeah, so that is just really great. Thank you so much for the overview. I think that dovetails nicely into the other economic relief program that we're going to talk about that's also launched recently, and that is the Restaurant Revitalization Fund. So we will keep you around, Larry, for questions, and now we'll bring in Karen. And Karen, we're excited to have you because there is breaking news on the program. So, you know, I know this program launched 2 weeks ago, and what have we seen so far?
Thanks so much, Leslie. Well, the portal opened on May 3rd, and less than 10 days after its launch, the Restaurant Revitalization Fund has now been noted by the SBA in an announcement yesterday that they have less than half the money they need to fund what's already been submitted.
Whoa.
The U.S. SBA, which administers the RRF, reported on Wednesday that restaurants, bars, and businesses providing on-site food and drink, providing on-site food and drink have submitted 266,000 applications in the last 10 days, seeking a total of $65 billion, which is more than twice the $28.6 billion that Congress had allocated under the program. So the RRF, which mandated that certain types of businesses would have priority for the review in the first 21 days of the program, those businesses, which are, you might remember, women-owned, these are all majority owned by women, by veterans, and by other disadvantaged, socially and economically disadvantaged businesses who have that status, which self-certify to that status. They have submitted 147,000 of those 266,000 applications, which has totaled $29 billion. So obviously, even with the applications that have been submitted, if all of those are deemed to be accurate and fundable, then they've already used up all the money just for the priority group.
Wow. That is pretty unbelievable. So what are some of the most frequently asked questions that we're seeing? I'm sure one of them is just, do we think there will be more funding? So talk about that, and then talk about some of the other questions that we're seeing.
Yeah, exactly. So I would say on that front, I attended an SBA webinar several weeks ago, right before the launch of the program. And what they were saying was, get your application in as soon as you can. Everybody, don't just wait if you're not a priority applicant. And so they wanted to kind of get people to submit to see what exactly are we talking about in terms of what's really needed. So you can see they got that, right? Because now we know already $65 billion, double what had been allocated. So I know the SBA wants Congress to relook at funding additional sums of money related to this program. I know that the Biden administration is very passionate around the restaurant industry. The National Restaurant Association itself has done a lot of lobbying efforts really for the last year to even get this Restaurant Revitalization Fund to be part of the new law that was passed. So I think from that perspective, I would stay positive is what I would tell everybody. But obviously, there's no guarantees, right? Mm-hmm. So right now, the portal is still open and is still accepting applications. The SBA indicated that they had set up various tranches for the different levels of gross receipts that a particular restaurant business would have. And the smallest of the businesses, which was a tranche for $50,000 of gross receipts, very, very small businesses, still has some money in that tranche. However, the SBA also did indicate upon the launch of the program and in the law that there would be an ability to reallocate the tranches. So I wouldn't put a ton of, credence on that in terms of them maybe moving some things around. But I would still encourage people to apply. I'm going to cover some of the frequently asked questions I've been receiving over the last 10 days, and we'll continue on, I think, with this discussion. But I would say continue to apply while the portal remains open. At some point, they will shut it down, and then it will hopefully reopen when additional funding is received. So we will see about that. So why don't I go on and talk a little bit about some of the questions that we've been receiving, if that sounds good to you, Leslie?
I think that sounds great.
Okay, perfect. So I would say some of the questions that we've been receiving a lot of is really related to which types of businesses are eligible for this grant. So I wanted to just talk a little bit about some of the examples that we've been encountering in things that I've researched with the SBA directly. And those are related to what I call these mixed use retail businesses. I touched on this the last time I spoke on the live stream. So these are businesses like golf courses, hotels. Those are typically not able to qualify because it is not the main purpose for that business. And that was the whole part of this RRF, was really that a business had to have its major reason for existing to be the serving of food and beverage, in-house. So sure. I would mention that. Some of the other businesses, though, that are, I would say, sort of companion businesses to the food and beverage industry would be wineries, tap rooms, inns, bakeries, distilleries. Those are all mentioned as categories of eligible businesses. So when you look at the application form, you'll see them listed. So those are all eligible. But one thing to keep in mind is they must have the sale of food and beverage be 33% or more of their gross receipts in 2019 in the first measurement year in order to qualify. So there is that additional qualification.
Yeah, so that's good to understand. And then you talked too about one frequently asked question being sizing of the grant questions. So what does that mean?
Yeah, so it's been really businesses trying to figure out, first of all, which calculation they need to do. So for those of you that have been through the process, or those of you that have looked at the application form, you'll see that they actually talk about 4 calculations. There's one calculation that's for businesses that had been in operation for many years, obviously a full year in 19 or before. They're going to use that Calc 1, that Table 1 on the application. If the business started during 2019 but didn't have a full year of 2019, as I mentioned on a previous discussion, they would use that second table. If the business started in 2020 or 2021, or has not even yet opened, they were able to use that third table. And then the fourth table is just if you have a situation where you have multiple restaurants and one had been open a long time and another one maybe just opened partially in 19, you can actually fill out each of the tables and then use that table 4 to just summarize the total amount of the sized grant plus the total amount of the gross receipts. So that'll be obvious on the form. So I would say the other thing that we get a lot into is really determining what is gross receipts, because that's a big part of the calculation of the grant sizing once you figure out which table you're supposed to fill out. So I would say in the gross receipts, one of the things to keep in mind is you're really thinking from a restaurant perspective of their POS reporting. So if you have gross revenues less discounts, that's really considered gross receipts. Now it is really important because you're going to be submitting 19 tax returns and potentially 2020 if they're done, and you need to reconcile again to the gross receipts line. So if there's other things that went into those gross receipts, namely grants from states, other local state grants that came in, if you might have gotten an EIDL advance during 2020, you're going to need to remove those in the gross receipts line. You might want to, again, I think Larry gave great advice there. You might want to include a reconciliation to show why the number that you're putting on the form in the calculation may not be exactly what's on that gross receipts line on the tax return. Also, I've had question around tips and sales tax. Should they be included in gross receipts? And they're just both pass-throughs, and those should not be included in gross receipts.
Well, that's all helpful parameters. And then what about questions just regarding documentation and what you might need to submit?
Yeah, so there have been a lot of questions regarding documentation. And one of the things that is very important to remember is that the 2019 tax return is absolutely mandatory. You must upload that and submit that. The other thing that's mandatory for every applicant is they must submit the last 3 months of their bank account statements. And the SBA asked for the most recent, and this is for the bank account that the money that you're going to get from the grant goes into, the account and routing number that you provide at the top of the application. Additionally, you'll need to provide proof of your 2020 gross receipts. So this can be from a 2020 tax return if it's been filed, or from a POS report from your POS system, or an internal or external financial statement that has net revenues on it. The SBA has indicated, however, that their preferred documentation is tax returns. So if your business just started or is not yet open, you're going to need to provide support for the eligible expenses that have been incurred when determining your grant size.
Well, I think that's all really helpful parameters, very interesting updates just with the popularity of the program. You talked a little bit just about how backlogged and in queue they are. So, you know, I think when you think about submit, there's some questions as to what happens. I don't know if you've got any thoughts about that, especially just in light of how backlogged we are, with where you think that's going to land.
Yeah, so basically what I would say is that the SBA had said that it would take about 2 weeks to review every application because they're verifying the tax return that you submit is what the IRS got and things like that.
Sure.
So that will take a little bit of time. However, they planned on sending this money out very quickly, and they are starting to fund the ones that are in that priority group. However, now with the news that that has all been used up, I think what will happen is they're going to focus and get all of the things that the priority group applicants that have applied, get those funded. And then to the extent there's anything left, I think they'll hold on to those applications, which is why I would consider recommending people to go ahead and still apply, even before, until they shut down the website for the time being, hoping that when more money gets allocated, those will get processed and they'll be still in line, if you will.
Awesome. Well, thank you, Karen, so much for the updates. Definitely just exciting for restaurants to see what happens. With that, I do want to take some questions from the viewers because we have a variety of questions that are coming in. So I want to start with one for Camille. People are just asking all sorts of questions, Camille, about refund status. We do have one from Rachel, and she says that the IRS has been telling her that they continue to experience processing delays of amended returns. She's not alone, by the way. And as a result of the tax changes that were submitted at various times in 2020. So any suggestions on what she can do? For example, should she write a letter to the IRS? What can she do if they just keep saying they're experiencing processing delays?
So it depends on when the amended return was submitted. And again, how it was submitted. So again, amended returns, they don't even start processing for about 16 weeks. And so you can't really find out much in the system for quite a while. If it's been beyond that 16-week period, again, you can go in and talk with representatives and things like that. And in the 16-week period, you can also check on the where's my refunds. So the amended returns take a lot longer, and it's all COVID related, so they're really far behind. The IRS is still processing returns from last year, and so they're several million returns behind. So it's just taking a while.
Yeah, thank you for that. I think everyone just needs to take a breath here and hope that they catch up. Okay, we have one for Larry, and this one is related to Shuttered Venue and just in terms of qualification. So we've got a question as to whether the Shuttered Venue program should cover the symphony that uses a private-owned facility, or should the grant cover the facility itself?
I think the grant should cover both. So I think if you had the facility and you had a live event there, I think facilities count But I also think that the symphony, and again, there's very specific requirements under each type of entity. So a movie theater has a certain requirement, and the museum and the live operators have to have, you know, a lighting rig and certain people hired and things like that. So if you go to the SBA website, there's an excellent summary of the requirements by type of entity that'll help get you to the point where, yes, I think I qualify. But if you think you qualify, I would go in and apply. I think that's why there's 12,000 applications out there that haven't been completed, is because the application process will stop you if you answer a question incorrectly and don't qualify for the grant based on your answer.
Sure, that makes sense. Okay, we have another one, and this one's for Karen. And so, Karen, this one is in terms of businesses and qualifications for the restaurant program. And so, would this individual be correct in assuming that a business which is set up to service the restaurant business, basically they find chefs and restaurant managers, would itself not qualify for the grant, even though their business was devastated by COVID?
Yeah, so that's a really good question, Leslie. And I'll tell you, you have to go back to that original definition that was in the law, which says it has to, the primary purpose of the business needs to be serving food and drink. So I would say no in that particular instance.
Okay, that is super helpful. Well, unfortunately, that is all the time that we have for today, but I want to thank our speakers so much. I want to thank our moderators who have been live with us, and I want to thank all of you for your engagement and your questions. We encourage you to register and engage with us. We love having you be part of the conversation with us. We will see you next week, but until then, please continue to stay safe and healthy and have a great day.
Bye.